Nigeria, AMCON has come onto the radar with a number of private investors showing interest in merging with the Nigerian asset management company. Wole Famurewa spoke to Hewitt Benson, Executive Director of AMCON, to discuss the potential partnerships for AMCON with other private equity firms.
Assets under management at the moment, we have 1.7 trillion naira worth, with a face value, and face value meaning outstanding principal and accumulated interest of 3.3 trillion naira. But as per our own valuation, the price we paid is 1.7 trillion naira, which we issued bonds for and paid for these loans. And these bonds are currently, as you know, listed on the exchange.
So what type of loans, what type of collateral, what type of assets are you dealing with right now?
We bought all loans, all non-performing loans in the industry, covering from aviation to oil and gas to real estate to margin loans, which is a big thing.
Right.
In terms of collateral value, in terms of collaterals, the asset classes are primarily real estate, securities, as in shares,
right.
Some downstream oil and gas assets, as in tank farms,
yeah,
and aviation, planes.
All right, can imagine. Okay, give us a sense of how investors can work with AMCON then. You just mentioned margin loans. There's really big expectation that AMCON is going to be huge. It's going to drive to a large extent the plans to introduce securities lending to the Nigerian Stock Exchange. Give us a sense of how partners can work with you in this regard.
Okay, there are two issues here that we have to look at. The securities lending is one part. I think it's one that we have been promoting with the view that we own, directly or indirectly, because, you know, we've bought a lot of loans, but whilst we bought loans, we haven't, the collateral is not necessarily ours yet. But securities lending is, I think, a way to go, for the simple reason being that the structure to operate securities lending is not necessarily in place yet, you know. But in terms of how investors can partner with us, I think there are a whole host of ways. Number one, I mean, if they're interested in a particular class of assets, particular companies, they can approach those companies towards recapitalizing them, restructuring them, and coming to AMCON, knowing how we operate. Remember, our focus is to try and get these loans reperforming, if possible. So we are open. We aren't necessarily easy on bad debts, you know. I must mention that these loans are worth a lot more to us than most banks. The simple reason being that we have huge powers of recovery, which banks don't have. Another way that private equity investors can partner with us, and this has already started, by the way, is in assets that we already own, either by forfeiture with certain bank executives, as you're aware, Oceanic being one,
right,
or loans that we have foreclosed on, which are impossible to get them reperforming. Now, in those areas, we are in discussions with quite a few private equity investors who would like to buy those assets off us or partner with us. We like these private equity investors to come not just with cash, but with key competence. There must be a differentiating factor. AMCON's quite rich, but what we're looking for is key competence to partner with us in managing these assets towards realizing greater value and hopefully reducing the cost of this resolution exercise.
To what extent will you deal with the retail market? And for instance, a scenario where I have real estate, which is obviously not as liquid as the securities that AMCON is holding, and I need those securities to support transactions that require liquid securities. Will AMCON, for instance, deal with me as a retail investor in perhaps lending me those securities?
I wish. Unfortunately, we're not a retail bank. We are, quote unquote, and I don't tend to like that phrase, a bad bank, but we are primarily an asset manager, not necessarily a retailer. Transactions, we can avail or structure credits for NPLs that we feel need that support to get them reperforming, given their condition. I think only for those kind of transactions can we structure or directly support with credit or capital to get them reperforming. But in terms of the retail market, to walk-in clients and day-to-day clientele, absolutely not.
Obviously not set up for that.
That's not our focus. That's not our focus.
All right.